Many people believe to know how to manage their monetary resources best. But really what you believe is right for your money. It's not just the knowledge of how the stock market or the cryptocurrency market works that will lead us to financial independence and wealth meant as a freedom. Let's begin by giving a definition of what are the solid foundations of a satisfactory financial knowledge. What are the real bases of financial knowledge? Building a financial foundation is a time-consuming process. The key is to build a solid financial foundation that takes care of you over time while supporting your future goals. This means being responsible for your daily shopping habits as well as your long-term thinking. But how to build a solid financial foundation in 5 steps? Implementing a structure is surprisingly simple. If you want to boost your financial confidence and set yourself up for success, this 5-step method will help you to get started. The number 1 is organize your personal budget. Before you start anything else, make it clear where you're right now with your money. Quickly summarize your assets, what you own, and liabilities, what you owe to others. Your assets can include things like your bank account balances, investment holdings, house, jewelry, family car, and more. Your liabilities are the debts you have, such as mortgage, car loan, personal loan, student loan, credit card debt, and so on. Once all data is collected, you will have a general idea of your net worth by adding up all your assets and subtracting your liabilities. The number 2 is protect your finances from the unexpected situations. Now that you have your personal budget organized, it's important to take the necessary steps to protect your financial balance in the long run. But how? For example, by creating an emergency fund. An emergency fund is a must to keep you financially afloat in the event of unexpected costs, job loss, or other unforeseen crisis situations. On average, a 6-month emergency fund is sufficient. Once you have created your emergency fund, check your insurance coverage. Insurance policies limit your expenses when events such as unexpected medical examinations, traffic accidents, disability, and death occur. Even if you have coverage, we recommend re-evaluating it over time based on your lifestyle and current family composition. Looking to the future, it is important to create an estate plan. It's a set of indications explicitly decided by you on how to manage what you will leave. So, for example, the plan could include the appointment of heirs, the assignment of guardians for minors, or the assignment of your guardian in case of mental incapacity. The number 3 is make a debt relief plan. While some debts may be beneficial to your financial situation, you should be careful not to exceed a certain level of debt, as paying interest on the money you have borrowed can prevent you from investing money for your other financial goals. Making a debt relief plan is a great way to get cash to build your strong financial foundation. For example, you could implement a snowball effect accelerated debt repayment strategy. In case you have more consumer credit loans, you could consider a loan consolidation operation, so as to lower the monthly payment and simplify your monthly management. The number 4 is set your financial goals. Now that you have settled the previous points, the question you have to ask yourself is, what do I want to achieve? What are my short and long-term goals? Write them one by one following the SMART methodology, which helps you create objectives that are specific, measurable, achievable, realistic, and defined over time. Some ideas to get started. Create a 6-month emergency fund. Set aside 15% of monthly income. Invest in medium-risk products with at least 5% return. Save for a down payment on a house. Create a holiday fund. Create a second source of income. Retire by age 60. The number 5 is the ability to execute helps fate make things happen. Once you have your budget and goals in written form, try to combine both and identify areas for improvement in your current financial situation and how you make changes to achieve your goals. At this point, execution is the key to launching your goal, which must be achievable and realistic, so worry about reaching them one at a time without too much haste. Be disciplined and stick to the goal plan you have developed. Remember that life changes every day, so sometimes, after a few months or years, it may be necessary to review some of your goals and perhaps make adjustments based on particular changes that have occurred recently. Let's come to a conclusion. Building a solid financial foundation requires focus, commitment, perseverance, and discipline. Always remember that you can only be financially healthy if you spend less than you earn. Try to make your life easier by automating as much as possible. For example, by setting up recurring money transfers to special saving accounts or by automating bill or loan payments, so you never miss a due date and thus have more time to yourself. Follow your success step by step. As you see tangible results coming, you will gain confidence in your ability to create and maintain a financially healthy life.